You're now promoted, Amelia. Welcome back to F.A.C.E in our Zoom room. Waiting to hear you. Thank you for bringing the doorbell.
Yep, I can see her. She's.
Can you hear me?
Can hear you. Yes,
Awesome.
Amelia.
Okay, hi.
Welcome back, Amelia, to our new room in Zoom.
That's exciting. Thanks for the invite. I appreciate being here very much.
You're here for the you're here for the christening of the room. So
I know.
do you want to share your screen? Anything that you want to, while we're talking about currency?
Yeah, sure. I can go between. How do I share my? Oh, right here. Sure.
Yeah, and then it will
let you choose
highlight
which one
you want to show.
That's. I don't know. This one is share screen. Let's see.
There we go.
Let me take this away. Okay, here's the. I want to.
All right, we got it.
We can see your Bloomberg.
Good. Okay.
All right, beautiful. Amelia, I want to give you credit for excellent forecast. The last time you were on, you talked about if you were at a bank and you weren't short for these big declines in cable and euro, you lose your job, and you were maintaining a core short position in both of them, and direction has been your way. So nice call.
Thanks. It's not always easy. It was a little choppy, but yeah, my views haven't changed so much since last time, but I just recently spoke at a couple of trader conferences, and some questions came up. There are individual investor kind of retail conferences. I wanted to just talk briefly about that, and then we'll look at some charts and some.
Yeah, I was curious as to when we talked, I don't know how many months ago it was, the trade war was just a distant possibility, and now we're in the middle of one, and if that's going to change flows, FX flows, at least for a while. So why don't you go ahead and fill us in with what you've been telling everyone else first.
Yes. So, in global macro, we tend to watch, we're kind of like the doomsday preppers of the trading world, the global macro traders. And so we tend to think, what huge things can go wrong across the world or go right. But mostly when, central banks or, governments make policy errors, they usually don't make them to the upside. They usually, unfortunately, make them to the downside. So we've been watching macro themes, and here's a quote I put up. It was interesting. Money Show actually used it. That macro themes tend to simmer in the background, and they cause volatility when they move to the front. And then, those themes that come into play, they can cause big directional moves in the very short term. And so that's been interesting, what you said about, basically the trade war. And this circle here is May 6th, when that was a market open when President Trump had that tweet heard around the world on China tariffs over that weekend, May 5th. And so you see the spike in the VIX here is what we're showing. And it's come down a little bit below 20, but it's still, pretty elevated. And
yeah, the market kept making new highs, Amelia, and VIX kept making higher lows. Kind of a tell to you?
Yeah. It's been interesting, and you want to look for, when the VIX, it's a little bit, we'll take a look at like sterling vol in a little while, but when it gets too low, there's only one way it's going to go back up. So, it's important to monitor it from both sides. And so we had the April 30th high in the S&P 500. This is the S&P and the VIX we're looking at. And then you just see the markers for the equity reaction to the China tariffs and then the Mexico tariff announcement, which was really cool because if you're trading, I was in the gym that evening when I set my alerts, obviously, for market news, and my alerts started in, about 5 or 6 o'clock. I forget the time exactly, but Eastern Standard Time, and, about the trade tariffs. So I knew immediately, go look at dollar max. And then I knew immediately, on the open the next morning, which you had plenty of time to prepare for because the market had already been closed when you sent this tweet. Equities are going to be lower just because for the past year, anytime there's a trade announcement.
The S&Ps were down about 14 handles after that announcement. In the aftermarket.
Which means you want to look also at dollar yen, moving lower yen strength. So it's good to kind of have these leading indicators. I mean, all in all, everything that's been going on has been showing the safe haven bid that the U.S. dollar has, because here's the U.S. 10-year and 2-year yields and the yellow and orange, just look at that, really plunging the last week. And the dollar, for the most part, well, the dollar is staying strong, the dollar index, but it came off a little bit the last week, but still.
So
you know
you
how
view this
it's holding up.
pullback in the dollar from last week as just another break to buy? And is it possible
I
that
do, yeah.
yields are getting to a point where they're so extreme that, like you say about the vol, there's only one way they can go, that perhaps what we're seeing in the 10 and 30 year could be exhausting itself here?
I think that yields have kind of overshot themselves, but U.S. yields. But in a way, you know, traders are still kind of pushing or angling for a definite Fed rate cut this year. And I know that, you know, one is priced, but I think they want to hear confirmation from the Fed, and they obviously have not heard that yet.
Well,
so,
that's because the S&P isn't 2,200 yet.
Yeah. So we'll
Don't
see.
you think the Fed is more S&P dependent than data dependent?
I don't think so. But what I do think, though, is that they are very concerned about the trade war weighing on growth in corporate earnings, and so that obviously impacts equity.
Okay.
So I would look at it that way.
Okay. I'm just more jaded than you.
It's true. I used to work at the Fed. I should make that clear. I used to work.
Oh, that's right.
At the
Yes.
Federal Reserve Board, so I'm always like on the Fed side a little bit.
All right.
That's my bias.
All right. Well, you solve a mystery that some people still believe in, Amelia. Is there really a plunge protection team?
No, I mean, they do their. I like the Fed.
Oh, you don't want to tell us.
I won't tell you, no. But
You'd have to kill us if you told us.
it's a secret. I do think that, but the fun thing about Jerome Powell is that, you know, now that we've moved obviously this year to one press conference after every meeting, you know, he's obviously had difficulty in communicating with the market in kind of a consistent way. And so that introduces volatility over all of the, you know, press conferences, almost like the ECB press conference, which is like a roller coaster of Mario Draghi and his little comments. So, you know, that's coming this week also. But anytime there's a Fed press conference, you know, you can kind of expect volatility on the day. So,
you know, Amelia, let me ask you this too about the Fed.
Mhm.
I had this warmest feeling inside of me near the end of the year when Paul and Janet and Ben were sitting there holding hands and singing Kumbaya. Didn't you?
I know.
What
They
I
all
mean, what?
came out in defense against the administration on Powell resigning. So it's a good show of unity.
And that's when he said, you know, I think we're going to, you know, we're in a watch and wait phase too during that
Yeah, he
press
did.
conference, right? So,
Yeah, during that.
you know, I mean, you bring in the poster childs for QE to kind of relax the markets a bit. Don't you think that was part of it too, theater?
Yeah, I do. I mean, I think that they want to communicate. They've been under pressure and criticism clearly from a number of sources to communicate more effectively and more clearly to the markets in a way that, you know, more average Americans understand and understand the role of the Fed and what they're doing. And so I think when they really got the heavy criticism, which was coming around December with that rate hike that they did, you know, which a lot of people thought was a policy error, and so did the president. You know, I think that they needed to show some sort of unity and go out all hands on deck and try to explain themselves a little more clearly. But, you know, when there's many people talking, it's hard to keep the message consistent. And I think that that's also a risk.
Okay. I have a specific question on the Dixie here. Okay.
Okay.
So, you know, I believe the difference between pros and amateurs are pros know how to lose, so they have money left to be right with. So the feeling I get is that you're still constructive the dollar.
Yeah,
I look at this chart. What price level would change your mind?
Well, for me, in terms of trading, remember when you're trading the DXY, I used to get this question all the time from clients. And when you're trading the DXY, 60% of the DXY is euro. And we have a giant euro event this week, namely the ECB meeting. And so it's most likely going to move. The ECB meeting and Draghi's comments will most likely move euro lower.
Okay. Why?
Yeah. Well, they already slashed their growth forecast a lot the last meeting. Let me just pull up Euro. And I think that, you know, a lot of traders have just wanted Euro to move lower, but they haven't really made a push, you know, a sustained push for Euro lower. So we're kind of like trading here in this like 112.17. That was like a flash crash here, you know, like 111.18 range. Right. And I definitely am looking for that to move lower this week on Thursday with the ECB press conference. Because as I said, Draghi is those press conferences are long. He says a lot of things. He answers questions quite bluntly from reporters. And, you know, he still maintained as of last meeting that they could hike rates at the end of this year. And so the market's really looking for him to not say that, to take that kind of forecast away.
Do you think that
so I think the SY will go higher this week.
Okay. Do you think the S&Ps would prefer, or, you know, our indexes prefer a weaker or a strong dollar now, because the dollar did kind of sell off with that last flush in S&Ps. So
yeah, the dollar has been, I think that was a little bit of an anomaly, and I think the dollar will continue to strengthen on the safe haven bid, because even if our economy slows, you know, I'm talking about now like 6 months out, and you know, the Fed has to cut rates, that doesn't signal anything good for the rest of the world. And also, there's so much uncertainty in the rest of the world. So we have uncertainty through the trade war here in the United States, but the rest of the world has Brexit. The rest of the world has the Italian budget fight. The rest of the world has inflation that's pretty much, you know, moving lower than our inflation, you know, moving lower faster than our inflation is moving lower. And so they're in a more critical situation. Our main risk here is trade war weighing on growth eventually, and just headline risk from an administration that likes to tweet and even has been very active on Twitter this morning, you know, for ahead of the London visit, which now the president's currently in London. Yep. You know, you're going to see a lot of headlines on that. I mean, we also have another massive deadline coming up for Brexit, which is Halloween Fright Night. I love the little.
When is that day? The 28th, 29th, or?
Now I'll show you. Well, let me show you some dates nearer term.
Okay. All right.
Just go through here.
Well, you're looking at housing. You cover everything, Amelia. You are.
I look at everything.
A specialist in everything.
So just nearer term, June 10th is the 5% tariff on Mexico. That starts that day. So yeah, typically, you know, that's not going to be a good day for the Mexican peso, say. It could also impact equities. And the June 28th to 29th, that's a G20 meeting, and Trump and Xi Jinping are expected, it's not confirmed yet, to talk about China trade at the G20 meeting. So expect a lot of headlines on those days, a lot of volatility.
So do you think President Trump will cave? Because I've seen almost Chinese national anthems for the trade war to stop buying Western goods. And I've interviewed a lot of people that have said that there is no way Xi will kowtow to President Trump.
Yeah, I think it's really tough. I think who does a really good job covering this is the Brookings Institute. Their research is free. They cover, you know, the minutia and the deadlines of the kind of trade war escalation and what could happen very well. I mean, there's no way of knowing, because I think that the president also doesn't cave. So, yeah, you know, we'll see. And I think a lot of the president's hand will be forced by, perhaps instead of being forced by China, will be forced by the U.S. equity market and how equities continue to react, because, you know,
great point.
Equities lower. So,
great point. Okay, so these are the two major dates. And when was that big Brexit date you were talking about? June?
Halloween.
Oh, in October next year?
Yeah, October. So the Brexit's been extended to October 31st. So we got all these awesome headlines like Brexit Fright Night and.
Oh, wow. Yeah.
Yeah. So Halloween will be trick or treat for traders. Which one will it be?
Are you going to wear an ex-Prime Minister May mask on Halloween this year?
I'm sure there will be a lot of those around trading floors. Trust me. This is going to be.
I mean, do you think the pound's going to wait for October 31st to finally take out 117? I mean, maybe that's going to be the bottom. Do you think that the majority of the sell-off will happen into the fall in cable? Or could we rally into it with hope?
No, I don't think there's any hope for Brexit anymore.
Okay.
I mean, it's just, it's just a really tough situation. It's driven entirely by headlines. But with the introduction now of, reintroduction, I should say, of Boris Johnson and him arguing kind of over the past week for a no-deal Brexit just to leave.
Right.
It's like absolutely nuts that option is like now back possibly on the table. And so
what a messy divorce.
Yeah, it's so messy. And here we're looking at sterling 6-month vol. This is around April 10th here.
Yeah.
It just collapses because on April 10th, that's when they push the Brexit deadline back to this October 31st date. So it's starting to climb, but sterling, let me show you 1-month vol really collapsed. And yeah, here we go.
I had an interesting guy on.
See the collapse in sterling 1-month vol on April 10th.
Yeah.
So it's so low that, kind of like we were talking before, there's only one way for it to go up. So.
Yeah. Let me ask you, with the euro heading towards parity, cable heading towards parity, is any of this being engineered for any reason? For them to be parity with the dollar on any kind of, are you expecting any kind of currency reset in the next several years? What do you think's going on here? Is it just a coincidence that they're both heading towards parity with the dollar?
Yeah, I think it's tough to say because, on a 3-year horizon for both Europe and, well, certainly the UK, so much, especially the UK, so much could happen that we're just not sure of. But, yeah, parity with the dollar is always, the dollar is the world's, reserve currency. So I think that's why people talk about other currencies in relation that are stronger than the dollar back in relation to parity with it. But it's really tough. You see here, this was moving up in the headlines earlier today, but here on Bloomberg, Deutsche Unicredit, they're moving the swaps from London, anticipating a Brexit. So, trading is leaving London, euro clearing is leaving London in the currency world. So that's not good.
Yeah. Wow. Maybe we live in interesting times.
Exactly. I wanted to just talk to you. Tonight is the RBA meeting.
Okay.
And they're supposed to cut, it's a big deal. They're supposed to cut rates 25% tonight. It's overnight Eastern Standard Time. So it's like 12:30 a.m. Eastern Standard Time tonight.
Okay.
A couple weeks ago, Westpac Bank, which is an Australian bank, major Australian bank. I used to work there for just, all knowing sake here. They were the first to call for 3 rate cuts by the RBA. So they're calling for a June rate cut, an August rate cut, and a November rate cut. Wow. And bringing the cash rate down from 150 where it is now to 75 basis points. And that's obviously an aggressive call. That's a big deal. Everybody thinks the RBA is going to hike. It's going to cut tonight 25 basis points. But, when it is the first cut, it tends to impact the currency. And the reason why I'm bringing this up is just because, Aussie been kind of holding up well. See the cash rate. It's tonight, 150, 125 is expected now. Economists survey 38, so almost everybody thinks they're going to cut. And then they have a press conference afterwards. So Aussie should be volatile tonight. Though the rate hike is expected and priced in, because it's the first rate cut, the rate cut.
Yeah.
It can kind of push the currency lower. And so it'll also matter what they say in the press conference tonight. And, Aussie's been kind of holding up pretty well the past week just because of, there's been a dichotomy in terms of equity prices in Aussie. Usually they follow equities lower, U.S. equities lower, but it really hasn't. It's kind of held up. And that's another reason why I think the DXY will be higher this week, because I think euro will be lower and I think Aussie will be lower this week with the rate cut.
Okay, you're showing housing prices here, and I look at it historically, and it looks like they peaked probably, a year after we did, before the Great Recession. Was it great for you? Anyway, up around that 15. up there,
Yeah.
and a lot of areas in the U.S. have recovered to take out the highs from '08 in
Yeah.
pricing. Maybe not the middle of the country, but Australia was like a failing rally, and we're testing crisis lows in Australia on housing right now. Wow.
You know, the employment is holding up well in Australia, so their jobs market's holding up well, but the house prices are just obviously collapsing.
Why?
Here. I'm not entirely sure, but I can get back to you on it. But it's just been a really tough. You know, also their housing market's quite different from ours. They go to auction and things like that. But it's just been a really tough housing. Yeah, I know. Now you want to go. Also,
they'll have to loosen their immigration standards maybe to bring in some buyers.
I wonder if it has to do with credit markets being tight there. I have to look.
Yeah,
but they also had a really recently low CPI readings were lower than expected.
Mm-hmm.
So, I mean, also, I just like to look at renminbi. This is China renminbi against Aussie. So here we have, that's the Aussie. Here's China renminbi inverted. So when it's moving lower, China is weakening against the dollar.
Right.
And you have that very important 7 level here,
right.
which we almost touched down in October, and we moved away from subsequently. But you know, when renminbi weakens, it really pulls Aussie down with it, and that's just a factor of 30% of Australia's exports go to China. China's flowing, so it's hard to have a sustained rally in the Aussie dollar when China's weakening its currency. It really can't occur for.
Yeah. So remember when China said it won't weaponize the yuan? You're looking for them to weaponize it and take out 7, you know, with conviction.
I think that they will, touch 7. I don't think that they'll take out 7 in one shot. I think that they'll kind of touch it. It'll be very disruptive to currency and Asian equities for them to just take 7 out. So I think that they'll actually touch it a couple times. Like they'll touch 7, come back up, touch 7, come back up, and maybe third time it'll break. But most currency analysts that I know personally, based in Asia, you know, in Hong Kong or Singapore, they think that the PBOC is going to try to move down towards 7.
Okay, if my memory is correct, Amelia, you have a target in euro sub parity, right? Or weren't you talking about 90 cents, 95, something like that?
No, I was talking more just parity. I think it's going to be tough to. Yeah, I think it's aggressive. It's tough to break parity, but you know, remember they're slowing more than the U.S. They have a budget fight going on still with Italy. They're being impacted by, you know, Brexit. They don't know. Certainly, they're not as impacted as the United Kingdom, but they still don't know what's going on there.
Does that commentary say that you would prefer being long euro pound on any pullbacks? We've had a very directional move to the upside. A lot of people were very bearish this pair under 86.5 and said it was breaking down, and here we are above 88, you know, above 88. Is that the trade going into the strengthening dollar, long euro pound, because the pound will demonstrate more weakness during the dollar advance?
I think it's tough. I think you're playing 2 currencies I don't like against each other. I would not do anything with euro sterling this week, just because I think euro should be weaker than sterling this week at the ECB meeting Thursday.
Right.
I would just leave it alone through the ECB. I was kind of interested in your last panelist, like Aussie CAD and Aussie, or like Kiwi CAD, Aussie CAD.
That was Steve Bolge who met you at the Money Show.
Ah, good. Sorry, I came in late, so I didn't.
Okay. Anyway, he's requesting an 8x10 autograph photo of you.
No, I knew one of him. I agree with him that there wasn't much to do on Aussie CAD, and would leave it alone. But the interesting thing just to watch for is, you know, Canada kind of has this like misplaced optimism on their economy right now, where Australia is obviously, I mean, everybody thinks they're going to cut rates tonight, so we'll see. But yeah, let me just go back. That didn't work. But I kind of think that that cross should kind of head lower, but it's a little early yet. It may head lower overnight with this, with this rate meeting. But we'll see. He was looking at the charts. I would just watch it tonight if you want to trade that. That's something to look for this evening. Cleaner is kind of Aussie against the dollar. It's a more liquid currency, but within the dollar block, Canada clearly, within dollar block cross trading, Canada clearly has the advantage over Aussie and Kiwi right now. So it's kind of just watch those to turn around again, to reverse.
You're an outstanding guest, Amelia.
Thank
Really?
you. You're an outstanding host.
Oh, okay. Mutual admiration. You really covered a lot of ground here. And I'm sure after people either heard you live here today or they see the video later, what's the best way for them to keep tabs on, what's going on in your, market tactician, creative thinking analysis that you provide? What's the best way for people to follow?
You can go to my website, www.marketcompass.
You want to show it?
Yeah, I want to show it. Hold on. Let me get it up. And we'll have new products launching soon. We're a little behind with the web development, but it's coming around. And so here's my website.
Yeah, Market Compass LLC.
And you can get the guide now. And what that will do is, if you sign up for that, it's going to give you my free content, but it's also going to put you on notice for my new webinar that I'm starting. It's going to start in July. It's going to be a global event risk webinar. So I'm going to give you important dates for the upcoming month that you want to watch out for kind of macro dislocation and things that can happen in the market.
All right.
And it's important for technical traders too. Yeah. I get this question a lot. They're like,
what are you going to do it online, or is it a live event somewhere?
It's a webinar. It'll be a live webinar, but it'll be recorded. So if you miss it, you'll be sent the replay.
Okay. And is it you, or do you have other panelists?
No, it's only me for now. So
okay.
Yeah.
All right. Well, Amelia, thank you for initiating Zoom for us today. And it was a great interview, and, gave me some ideas, and you still have your conviction about the dollar, and we'll see what the upcoming days come. Thanks for the heads up on all the different events that we're looking at.
It's an exciting week with the Trump in Britain, and then the ECB and the RBA, and there's a lot of Fed speak this week, and there's employment on Friday, U.S. employment. So it's a big week.
I don't even think Rod Serling could have wrote a script like this that we have going on right here, Amelia, my trading warrior sister. Thank you for coming in and edifying our community once again, and I'm going to get you on the books and do it again later on, most likely sometime in the summer, okay?
Yes, well, thank you. Trade well, everybody. It was fun to be here today.
Thank you so much, everyone. You could follow Amelia on Twitter as well, at her name, at Amelia Bourdeau, Bourdeau. That's
right. And also, if you have Instagram, I do behind the scenes news updates during the day on my Instagram story. And the Instagram is just Market Compass is the Instagram.
All right. Thank you so much. Have a great day. Have a great week, Amelia. I hope pips rain down on you and everyone that hears your words, okay?
You too. Take care. Thanks, everybody. Bye.
See ya. Okay. Now, how do I end the webinar? I think Steve's doing it for me. End meeting. All right, everyone. Remember, don't just count your pips, count your blessings. Mr. Low Tech, Dale Pinkert, made it through our first Zoom experience. And I'm telling you, I didn't have any fingernails left over the weekend. I'm going, oh, Zoom, oh my goodness. Good hunting, everyone. See you for Turnaround Tuesday.